All right, so welcome to another video. Today we're going to take a look at Robinhood from a stock perspective and see if the stock is worth purchasing in the future. If you haven't heard about Robinhood, it's basically a trading application for you to make some trades on the stock market. Now, keep in mind that these are recommendations, just my own personal insight and opinion. So let's kick things off and take a look at Robinhood. Now, Robinhood, it continues to drop. This stock, the way that they make money is through order flow. So let's say they have their buddies and friends over here. Here is Robinhood. Then what they do is they route your order through a certain person, or in simple terms, they route out through here. So let's say this guy's selling stock for $1.06, then this one's at 104, this one's at 103. So your order gets routed through the $1.06, and that way instead of paying $1.03, you paid $1.06 for your stock, paying up a little bit more, and Robinhood takes the other, the little cut. So they make money in other ways as well, but that's kind of the simple basis behind it. So anyway, as we take a look at this stock, is it kind of worthwhile? And I think it's just because of the popularity that everybody is really interested in kind of the stock overall, and there's a lot of hype behind it. A lot of people use the application because of the free trading, but a lot of companies now have slashed their trading. But if you look at this one-year chart, the stock has not been doing very well. It just continues to plummet. So I think right now that we've got the first green week that we've had in a long time. This stock, every single basically week for, let's say, the last 2.5 months, 11 bars. So for the last 10 bars, this stock has been red. So 10 weeks in a row, we've been down or red, and the volume continues to build on the sell side. So this is not good. We had the IPO over here, and this stock just continues to plummet. So this company overall, they've got their trading application. But if you're interested in buying it and you're thinking, hey, this is going to be a good stock in the future, what are some of the signs that you're looking for? Obviously, right now, you might be trying to nibble and bottom fish, like in this area, and that's okay if you're trying to do that. But how could you approach it? Well, if this stock, and you think this stock is going to turn into something big later on, or maybe a takeover target, that could also be something pretty cool. Then in that case, what you were watching for is a possible rounding bottom here. You might see some spikes periodically, like you saw right here, where the stock is just kind of bouncing. So you might see like some big spikes. Here's an example of DKNG today, where it's just spiking up. So you might start seeing stuff like this, and then that stock will start creating like higher lows, and it starts kind of going in this direction. And that's what you might be looking for with Robinhood. So for now, you're not seeing that, but you're starting to see a little bit of basing around this 13 right now, kind of like what you saw here at 15. So if you can get a little bit of a base and you can catch it and it starts digesting some of this price movement sideways, or even to that upside, creating lower highs, that would be a great sign. For the time being, this thing just continues to go lower, and there's a ton of selling pressure, a lot of short pressure, so it doesn't look good. But if we can get that turnaround a bit and start curving, then that's really what you're looking for. So how do you play something like this? How do you bottom fish the right way? Well, let's say you're trying to get in, let's say you want to put in like $2,000 in the stock. Okay, what most people do, what they go in is they put in $2,000 like, hey, it's starting to go up, I'm going to buy $2,000 worth. Wrong. This is not the way you do things. Not for stocks like this. So how can you do it a better way? So if I've got, let's say, $2,000 and I want to put in, I'm going to say a cost basis of about $15, meaning I think somewhere in between here, between 15 and 13, and I'm going to pay up about $15. So let's just say $17. I probably can get about 117 shares. Okay, so let's say I'm trying to get about 110 shares. I'm just trying to give myself a little extra wiggle room just in case. So if I'm trying to build up a position of about 110 shares, well, the way you would approach it is kind of like, okay, let me buy like 10 or 20 shares right now. So I could build a position of like 20 shares now at this price point. Then if it keeps powering higher, I'll build another 10 shares. Okay, if it builds lower, I could get another 10 or 20 shares. And what you're trying to do is allocate things across 2 to 3 months. Okay, you're not really trying to do it all in this little bit, because this stock's been going down and it could still actually keep going down. So what you're trying to do is go in and reduce the risk across like 2 to 3 months. So if you're like, let's say you're going to hold a stock for 20 months. Okay, if you're thinking like, okay, maybe it's a 2-year, 3-year investment. So if I'm doing let's say 24 months, let's say it's a 2-year investment. So I will allocate 10% throughout 5 or 10%. So it's going to take me let's say 2.5 months or so, 2.4 months, or let's just say 2 months to distribute everything. So now I go from here to here, I go 2 months worth, and I'm going to try and place a bunch of my trades there. Unless it starts breaking 15 and turning around, then I can go and get my 100 shares faster, or 110. So I'm going to go in, go 10 shares, get another 10, get another 20, and then if it starts breaking the 15, I'll get, the rest of my shares. Let's say I get 80 more, and then I'm done, and I've allocated. Otherwise, people go in, they buy their 110 shares, and they're done. They think, okay, that's a great spot. No, you got to average your spots up until your range. And if you look at your range, that's a way smarter point. So I got some here, got some here, I might have some here, got some here, I got some here, and now my cost basis is somewhere here, or somewhere around here. So you're looking for what's your cost basis. If I'm trying to keep it around the $15 mark, then that's how you do it. But now I've spread my risk across different durations. That's the smart approach. That's how you want to do it. And if you have other stocks you want me to take a look at and you have requests, check out our Discord channel that you can sign up in the description. You can request a specific stock from there, as well as interact, get some live announcements and some tidbits and tips for the market days that we have. Anyway, thanks for joining me. I'll see you in the next video.